What's going on, guys? Welcome to our weekly prep. All right. So it's just extremely important to know what is the main focus for this week, depending on the type of assets or the pairs that you want to trade. So before I get to it, I just want to start off with the Federal Reserve rate decision, because that's what's going to be the main focus for this week. If you're trading US equities, if you're trading the US dollar, this is something that is going to really cause very big reactions in the markets. Okay. So we have to understand what to prep for, because this actual rate decision coming up, I'm gonna go through the rate decision first, and then I'll just go over the weekly prep, right? Because I know this is the main focus. So this rate decision, we're gonna have the dot plot, right? And this is the dot plot from the previous rate decision. So just understanding what how the markets is reacting so far, right? From last year before Trump came into administration, the markets was following monetary policy. And the previous dot plot, not the previous, not the one that we had from I can't remember. I think it was November. It was can't really get the I can't remember the actual date where the previous dot plot. Yeah, here it is. All right. So the dot plot that we had, I want to talk about September, because last year, right, that you can see right here in 2025, markets was anticipating more rate cuts, at least the faster rate heading towards the faster cut of rates heading towards that 2% goal. Markets was expecting that, right? This is where we started seeing that bearish dollar come in place. Very bearish all through like 2024, right? Because we started seeing inflation numbers actually declining. They started Powell actually came out, didn't really want to say it, but he pretty much was telling the markets that we are controlling inflation. Inflation is going to hit target. And we started seeing a little bit of easing in the labor markets, not as much, but just enough for expectations of 2025 to show at the end of 25, we was going to be around that 3% target goal, right? So heading towards December, that was the last dot plot that we have. You could see that now they're expecting inflation, the rate decision, the rates to be around 3.9%. So we saw that all these members expecting all this dovishness, all that drop in rates actually came back up, is more indecisive, right? More uncertainty. I believe we all have a better understanding at believing that the reason for the Feds not wanting to cut rates as aggressively as what they did before was probably because they thought the US administration was more likely to be the same for the next one, right? So when we saw that Trump actually came into office, right, and actually winning, he has a different type of fiscal policy. So understanding that, this is why the Feds was like, hey, all right, well, we are expecting rates to come down, but if he's actually talking about trade wars and tariffs, right, that's probably going to that's going to be inflationary. We have to wait to see how tariffs actually impacts the markets. Then we can start going back to our fiscal policy. So you can just see where now all the members started pricing at the end of rates just to stay. They're pricing in more rate pauses, right? Holding rates for more meetings for this year, 2025. And then you can see in 2026 compared to September, right? They was expecting it to be below 3%. Now you can see that they're not even expecting it to be below 3%, even at 2026, not even in 27, right? The longer run, not even there. So what we're going to, this rate decision is going to be all focused on the dot plot. That's what's going to really cause a direction in the markets, right? Because we're like, this is just a rundown, right? When my fundamental outlook for the Feds is just neutral, because lately, since January, markets has just been reacting to sentiment, not really reacting to economic data, as most of you guys could understand. Like, oh, last week we just had lower CPI, lower PPI numbers, but how come we didn't see the reaction in the markets, right? And we seeing reactions in the markets when Trump is talking about tariffs. Markets is more focused on risk sentiment. So when we get market fear, that's causing dollar to rise as a safe haven. When we seeing that he's talking about peace, that's causing dollar to weaken, right? And even before that, we've been seeing such a bearish dollar, right? And it's interesting to understand that bearish dollar. You don't have to read through all of this, but like what I just showed you guys, that the Feds is has a hawkish pause stance, meaning that they're not looking to cut rates aggressively. They're more likely to continuously pause rates. Even if they cut rates by 25 basis points, the markets is expecting them to only cut rates at least 2 times this year. With the lower data, maybe now they're expecting 3, but the Feds is expecting to pause rates. The markets and even Trump is convincing the markets, hey, we need the Feds to cut rates this year. We need them to lower interest rates. So the markets is kind of like going against Fed policy, right? Because if we look at the dollar, just going to go to the higher time frame, we've been seeing such a bearish dollar coming in. It's kind of like the markets is just ignoring the Fed's hawkish policy because we're supposed to be seeing a stronger dollar. Even with like geopolitical tensions and what the Feds are doing, right? When it comes to even a dot plot, most likely, I don't want to predict, but most likely this dot plot is going to be showing less rate cuts, right? Is most likely. Are we going to see a stronger dollar? It should be from the dot plot, but markets is still expecting the Feds to cut rates. So the markets is not following the Fed's policy at the moment. So that's why I put neutral, overall, but we've been seeing lower inflation. The labor markets is still strong, but we're seeing a little bit of deceleration in the labor markets. That is probably the only reason why we're probably going to see the Feds cutting policy, right? They're going to be more dovish, but the uncertainty of Trump trade wars is what's going to cause the Feds to stay cautious and data dependent. That's what they're going to most likely say, is being cautious. But the dot plot goes against what they say because the markets is going to react to the dot plot. Because even though that we know Jerome Powell is going to keep the same tone, right? Solid economy growth. We're seeing somewhat lower inflation. We're seeing a little bit of elevated unemployment, but we're still going to follow data dependency. That's what he's going to say, right? But this is what's going to really move the markets because if we see that this December is looking like September, right? For 26, like for the rest of the year, we're seeing that they're expecting rates to end below like around 33.5% or around close to 3%. We're going to get a bearish dollar. If we see that it remains the same, right? If the dot plot is the same as December, probably see a stronger dollar. Or if we see that they're going to keep rates, they're not expecting much rate cuts, right? We're going to see stronger dollar. So it's very hard to go against it. So that's why once we see this picture, we see that the dot plot expectations, that's going to be the main driver. So just to give you guys an understanding, right? If we get the dot plot staying below December, so if they're expecting more rate cuts to come, anything below 3.5%, right? We're going to get a weaker dollar, stronger equity markets. That's going to be a really good buy for the equity markets. If we see that the dot plot is higher with the rates, or they're expecting not as much rate cuts as expected, right? We're going to see stronger dollar, weaker equity markets. So that's what we're going to be focusing on for this dot plot, all right? Well, that's what we're going to be focusing on for the rate decision. So it's going to be pretty easy to take advantage of it. So just be prepared when you guys trade that rate decision. And again, if you guys want to trade live, just let me know. If you want to trade live with me or join a private group, just send me a message on Discord. So now let's continue with the week ahead, okay? Because last week, remember, we had CPI, PPI data that came out lower than expected. So we should be expecting that dovish reaction in the markets, right? But when the data came out, we didn't see the reactions that as what we would have gotten last year, right? Maybe 6 to 8 months ago. It would have been those type of prints, dollar would have melted, dollar would have risen aggressively. It would have been the easiest trades of the week. But since we've been dealing with focusing on risk sentiment, Trump trade wars, geopolitical tensions, every single day since he came in office, we had talks on trade wars, right? This week, the most important part, last week was the most important part was that they finally added Europe, right? Talking about putting tariffs on Europe, Europe wine, right? Europe liquor. So even though it's like, when you're thinking about it, what the like liquor really? That's what's causing market fear, like really. But it's something new, right? and then now you're adding the European Union towards tariffs. You're looking to tariff them. So it's just escalations, right, of trade wars, which is adding more uncertainty. So this is why we just had that risk off market for that week. And one of the reasons too, we saw that gold continue to push higher and continue those highs, right? Because we're seeing escalations with trade wars. We're seeing problems between Hamas and Israel, right? The only positive, but we was getting a little bit of uncertainty with Russia and Ukraine. But towards the end on Friday, that's where we got a little bit of peace talks, right? Was on that Friday. But everything that we got so far supported risk off market. We started seeing a lot of uncertainty being priced in. And just looking at equity markets right here, you could just look at NASDAQ and US 30, like just pushing bearish pretty much the majority of the time, right? Just bearish price action. You could just look at it. All of that is due to uncertainty. So that shows if we continue to get uncertainty, there's literally no reason for the markets to actually be risk on if we continue to have this uncertainty. So moving forward, we're going to focus on Monday, like over the weekend. I'm gonna go over that too. But moving forward, focus on tariffs, right? Let's see if the tariffs are escalating or de-escalating. If we see that tariffs are escalating, expect more of a risk-off market. And risk-off market is just like equities will push lower, like what I showed you, and you're going to see safe havens gain strength, like a dollar to yen and a Swiss. You're going to see AUD, NZD, and CAD currencies getting weaker. If he is directly impacting CAD, JPY would be like a good pair for sales. If he's directly impacting Euro, like last week, Euro JPY would probably be good for sales, right? Or selling Euro USD or buying USD CAD, taking advantage of the pairs getting impacted by that event. And what we had over the weekend, because over the trade wars too, right? So we understood that the U.S. They put strikes out, right, against Hamas because they've been attacking our ships, right? You know, putting strikes in Yemen. So that is the U.S. is directly involved in warfare. I would like to see at market open, are we going to actually see a risk off environment, right? Because this happened yesterday. So it'd be interesting to see what happens, right? So when it comes to price action, you can look at gold, this area support 2908. If we could if we continue to hold that support for the day, like for the session at market open, right? And if we could see price start breaking above 29.91, then there's a higher probability we could start at least hitting back to those highs, at least hitting towards 3K again, or pushing higher because we still got uncertainty today. So if we could start breaking above that support of 21.91, right, with these escalations still being the main driver, we're probably going to see gold continue to hit those higher highs because nothing really changed yet. All right. And despite geopolitical tensions is still escalating. So that could cause gold to continue to push up. So focus on price action. But if you see gold break below support and we start breaking below 29.80, right, technically that would support some good sells. I don't like sells because I still believe we're still in the buyer bias, obviously, but we could see this low break. You can take it as a scalp, probably hitting some key areas. I would say if we could hit 29.52, right? If we could hit that area support, we could look at that for better buy positions to come probably approach that 3,000 area again, right? So these are like the areas of interest I would focus on, you know, just in case. If you want to take those sales, if we break support, it's technicals, be careful, but it depends on how the markets anticipate these escalations, right? So gold buys if we see escalations continue. If we see that things de-escalate, they're looking to sign peace deals and all of that stuff, and it's actually being proven, we're probably going to see more lower lows being formed for gold continuing for the rest of the week if we see those de-escalations. All right, so it's something just to focus on. Now, we got through that. So Monday, we want to see what's going on with Russia and Ukraine, right? Is the peace deal going to come in place? And last Trump comment said Monday is more likely we're going to get more talks about a ceasefire. If we see these things de-escalate, that should cause more of optimism, right? Do I think the markets really care about that optimism? Like for equities, maybe yeah. But markets is thriving off of uncertainty. We're seeing bigger reactions off of uncertainty. So the biggest moves that we could get is if we see that the ceasefire is fading away. If we see that Russia is causing conflict, Ukraine is causing conflict. If they don't actually sign a negotiation deal, risk off markets are the bigger and better moves, okay? When we see uncertainty, right? If we get like, especially for those gold buys, but if we see that they're causing more peace, we still got Israel and Hamas still going on. We still got trade wars going on. So just expecting the peace between Russia and Ukraine just to cause a risk on market completely, not really, right? We need to see everything come in peace, not just Russia, Ukraine, but that could also be positive for European markets, right? If you're trading, I think that would be good for equity markets for the part time. That would be good for German markets, Euro 500, UK 100. It'd be good for NATO. And looking at equity, that market structure here, Nasdaq, US 30, S&P, same price action. So I'm gonna just look at Nasdaq, right? Let's focus on market open. Let's see what happens when it comes to place. So right now we have uncertainty, right? If we see the risk off market come in place, we're going to see Nasdaq breaking below 19,600, and that area is going to break where you could take advantage of a good scalp to the downside. That will continue that risk off market that we've been getting, because market fear is still looming in the markets. When it comes, I still personally believe the uncertainty is just theory, right? We haven't really seen data support it yet, but the markets are still pricing it in. So if we get breaks below support in US 30 and NASDAQ, right, that would be the continuations over the weekend with these escalations of, these bombs getting thrown out by the US, right? And if you want to take advantage of that, just be quick. Geopolitical tensions is be quick moves, right? You're going to see a spike lower, and then most likely the moves probably would recover, because we got a lot of things coming up this week and we need certainty, right? Don't want to just trade and expect big moves when everything is just still up in the air. So just be cautious when it comes to that. Now, looking at data this week, just to give you guys a snapshot. Monday, U.S. retail sales. Sentiment has been a big driver. That's why usually retail sales, does the Feds really care about retail sales? They never tell you that they're adjusting their monetary policy over retail sales, right? It's inflation, labor data. But markets has been reacting to sentiment. So this might be important for New York session because sentiment has been a big driver. So just be prepared for that opportunity, just trading it on a Monday. And also remember Trump headlines. The reason why Monday probably, retail sales to me probably won't be a big factor, because we understand Trump is going to speak on Russia, Ukraine on Monday. So I think that will be the bigger focus. Just waiting for that. That could probably set up a really good tradable opportunity. Tuesday, we got the Bank of Japan rate decision. It's later Asian session, but when it comes to the time, right, it's between 9 and 11. They say they'll do it at 10, then they'll throw the rate decision out at like 9:45. It sucks, right? But just having access to a news terminal is what helps, because when those headlines come out, then you could just hop on the chart, right? Because it's a 3-hour time period that they just release rates. But supposedly it's probably at 10, maybe it's at 9, but heading closer to Tuesday, maybe we could get an exact time, and hopefully they do it at that exact time, right? But another video, I will go over the Bank of Japan rate decision just to help you guys with some trade ideas. Wednesday, we got the AUD labor data, right? So employment data is extremely important. It's over Asian session. Focusing on Australia labor data will be key. Looking at the central bank tab, Australia, still weak bearish, like overall when it comes to the fundamental outlook of Australia. They cut rates for the first time, since COVID. So with a bearish print today, if we get a bearish print for the labor data, that would further confirm more of a dovish RBA, right? If we get that weaker labor data coming in place, right? So right here, bearish outcome. That would be a really good opportunity for us if we could see a weaker print. If we get a stronger print, probably not going to be very optimistic on taking buys. I would probably want to see a weaker labor data print, so that could further confirm the RBA continuing those rate cuts. And I think sales on AD would be a better idea. And then also, like again, Wednesday, we got FOMC rate decision. That's going to be at 2 p.m. So just went over that. Thursday, we got UK labor data. But that same day, we also got the rate decision. So again, when it comes to the Bank of England, right, still very, very hawkish pause tone when it comes to the weak bullish, right? Also, them not being included in trade wars is also great for the UK. So with this rate decision, I'm expecting them to continue that hawkish pause narrative, right? So when it comes to the economic data this week with that labor data print, if we get a higher print, I would like the idea of a stronger pound, right? Leading towards that rate decision. I think that would be the best tradable opportunity. And then on Friday, we're going to end with CAD retail sales. Trading CAD retail sales, not really important. The main focus is tariffs, right? If he continues to put tariffs on Canada, that would set up better opportunities for sales on CAD, right? Because the tariffs is devastating for Canada's economy, and just the new prime minister said that yesterday that tariffs is very is hurting their economy. But looking at the central bank tabs, right? Central bank speakers for the week. So no Fed speakers really because we got a we got FOMC, so just be prepared for that. Not really seeing anything major, because we got a lot of rate decisions coming up, and nothing really sticking out, but just focusing on those rate decisions. But other than that, yeah, not really. Got the SMB rate decision as well at 4:30. Yeah, March 20th, but nothing really major. Just we just got a rate decision week. That's why it's not a lot of speakers, but they could be unannounced. Even earnings this week, guys. Like if you guys trading individual stocks, I like Thursday we got FedEx. I like looking at FedEx because it tells you, it makes you understand consumer spending, right? It tells you like what's really going on with consumers. When it comes to packages being shipped, is people really still buying stuff? So it's a really good thing to focus on when it comes to like FedEx, UPS, and stuff like that. But overall, nothing major. Okay. So just briefly going over the week. So you guys get a better idea on what to focus on. Sunday, no major data. Monday, US retail sales, like I was explaining before. Tuesday, this is important because Tuesday, that's when we got CAD CPI. CAD CPI is a really good print to trade, but when it comes to the CAD, again, over New York session, trade wars has been the main focus. So if you want to trade CPI, it has to be a clear print, right? Don't just take it because like the forecast is at 2.2%. And if it comes out at 2.1, you want to be all over sales. Like, no, it has to break below the low. It has to be at a 1.9. It has to be below a 1.9, at least a 1.8, a 1.7. That will be a tradable opportunity to just take advantage of the best outcome of this event over New York session because Trump trade wars is important. Again, we got Tuesday, the Bank of Japan rate decision. You see, it's saying at 10. So at 8, sorry, but I know they're not doing it at 8. It's so let's see what happens when it comes to the time. Wednesday we got Eurozone. Usually this date is at 5, but we had the daylight savings for the US. So I believe London daylight savings at the end of the month. So it's at 6. It's typically at 5, but at 6 we got the Eurozone. This is Eurozone inflation data, so definitely important to focus on for that if you're trading euro. Then Wednesday we got also the Fed rate decision. Australia labor data, we got that on Wednesday. Asian session. Thursday we got UK labor. So definitely that's why like when it comes to this print, sorry, focusing on earnings because earnings is inflationary. So that's why that's going to be a big focus is earnings coming out for that, and obviously focusing on the labor data so we could get something clear. And then that same day, we got the Bank of Canada's rate, the Bank of England's rate decision. For the Bank of England's rate decision, the vote count is going to be extremely important too. And we can see that they're expecting majority of the voters is to leave rates unchanged. So that's what the markets is anticipating, to leave rates the same. If we get an additional member to vote for a cut, right, that's what's going to be bearish. That's what it's going to cause a bearish outlook. So if we get one member to go for a hike, that would be a reason for a stronger pound. So when you look at the Bank of England's rate decision, it's the vote split that matters the most. All right. Then after that, we got jobless claims. And then ending on Friday, not really much, just retail sales. Okay, guys. So when it comes to this week, again, like really focus on these headlines coming out. So remember, focus on gold to see what gold does, safe haven pairs, equities, so you can look for the best tradable opportunities. So market open, we just had those headlines over the weekend. So it'd be interesting to see how the market opens when it comes to that. Will we see a risk off market, or we just see that the market's kind of like push it to the side, right? So just focus on those guys. And if you guys have any questions, let me know, and I'm happy to help.